Hi, and good afternoon, everyone, and welcome to today's panel with a very sexy title of Navigating Risk for Sustainable Space in 2024. I'm sure that's exactly what everyone was thinking as being the #1 topic for this year, so I'm really glad to get this panel started. Having said that, we should acknowledge that this is a subject that's becoming increasingly vital in 2024. My name is Jacqueline Chan. I'm a partner at Milbank LLP. Milbank is a leading international law firm which is globally recognized for our market-leading expertise in the space and satellite industry in areas from finance and M&A to commercial contracts, regulatory, insurance, risk management, and restructuring. I've been moderating this panel now for a good number of years, and I think this is indeed a very interesting year for this panel, as I think there's a lot to discuss and dissect this year. With the fast-paced expansion of the space economy, we're all aware that not only have groundbreaking opportunities appeared, but that the risks have similarly expanded. In the past year, we've seen the space insurance market face notable volatility, driven by several key factors. Declines in geo orders, the rise of life extension missions have shifted traditional revenue streams, while the rapid growth of LEO satellite constellations has introduced a surge in space traffic and enhanced collision risks. At the same time, enhanced and emerging technologies and tighter budgets have increased the uncertainty around satellite reliability, all against the backdrop of intensifying space weather activity. So together, these dynamics indeed present a complex risk landscape that challenges the entire industry, from insurers and satellite operators to their clients. So our panel today is going to discuss these risks and consider what the opportunities, strategies, and possibility paths to navigate risk going forward, in the hope that we might indeed find a stable and sustainable space sector that continues to drive innovation and growth for the future. Now, let me introduce our esteemed panelists. We have Sue Young, from Asia, the Chief Financial Officer from AsiaStat, Stefan Revez, Head of Space, SCORE Business Solution, and Stephen Monks, Managing Director from Marsh Space Projects. We're going to start the panel off today with an audience poll, just to make sure that you guys are still awake and listening. So please refer to your Slido apps. So the question that we're posing to the audience to kick off our panel is, what do you think the biggest threat is currently to the space insurance market? So I'm asking you to rank the following in order of biggest threat to the smallest threat. Reduction of space underwriting capacity, relatively new technology in satellite design, increased space debris and collision risks, and geopolitical competitive tensions. So can I take 30 seconds and just invite you to turn to your Slido apps and see and consider the poll. I'm giving you 5 seconds more, and then we're going to move on. It's really great, this Slido app. I get to see like the barred lines move up and down. So, okay. So I think what we actually see is that the reduction of space underwriting capacity is coming in way ahead, followed by, I think, about collision risk, space debris collision risk, and technology being neck and neck, followed in the last place, geopolitical competitive tensions, which is all pretty much in line with what we think as well in this panel. So I'm going to move on to the panel and ask our panelists to set the stage for our discussion today. We have prepared a few slides to elaborate on this, so I'm going to ask Stefan to kick us off.
Yes, thank you, Jacqueline, for this introduction and this poll, whose results are pretty interesting. Thanks also to the IPACC for inviting me this year to be on this panel, especially this year, because I think this year is really it's proving to be a game changer in the space insurance market history. And to illustrate my words, I'm going to talk a little bit about these slides. So this slide shows the situation of the market since 2009, and it shows for each given year the net premium on a given year in front of the total amount of claims that have occurred on that year. So the premium is represented by the blue bars, whereas the claims are represented by the purple bars. And there's one obvious elephant in the room when you look at this graph, is year 2023, where the level of claim that occurred on that year is above 1.6 billion US dollars. And this makes by far 2023 the worst year since year 2000 in terms of claim experience. It is to be noted that this year came only 4 years after 2029, which at the time was the worst year since year 2000. So actually, over the last 5 years, we had the worst 2 years in terms of claim experience since year 2000. At the same time, you can see that the level of premium, the blue bars, are at historic lows during this period. And obviously, this conjunction of events has made 2023 an extremely, has made that the market is facing a very, very bad situation. The results are bad. Over the last 5 years, the market has lost a significant amount of money, and the market had to react and is reacting strongly. The market is reacting strongly to come back to a positive territory, but also to pay back for all these losses that have accumulated over the last years. So the first evidence of this reaction can be seen on the evolution of the rates, which is depicted with the green curve. We took as a reference year 2009, and you can see how the rates have evolved over the years. You can see the feature, one of the features of the market, which is cyclical. We hit the bottom at the beginning of 2019, where the rates were at historical lows, and since then, the rates have significantly increased in twofold. The first increase was after 2019, where, again, the claim experience was very high and the market lost a substantial amount of money. But now we are living what we could call the second wave, which is even stronger, because back in the summer 2023, the market experienced very severe claims that is changing radically the face of the market. So today, we are at a rate level which is almost 4 times the level that was prevailing at the beginning of 2019, and we are back to the levels that were prevailing in 2009. So that's the first evidence. There's another evidence of the hardening which cannot be shown on the graph because it is related to the coverages provided by the insurers. Restrictions are back. Restrictions have been disappearing along the years after many years of softening. So exclusions are back when the market believes an exclusion is required. Margins are restored. And step by step, I would say that the market is going back to the basics that were prevailing when we collectively were making money. So, in my opinion, and this is a message I wanted to convey, this situation is going to last. 2025 will see an ongoing hardening of the market. And the reason why I'm saying this is that we have seen recently an increasing number of insurers pulling out from the market. And because of that, the supply and demand is changing towards less supply. And this is the reason why I strongly believe that the situation is going towards this direction. But I think that Stephen can say more about this now.
So let's move on to the next slide. Stephen, do you want to talk about the market?
Sure. Hello, everyone. Okay, so this slide, it's very busy, but the point of it was to pick up on Stefan's point of the market 2019 versus now. So this shows the capacity of underwriting capacity available by company, and we've aggregated together account for M&A and sort of underwriting teams moving company. But pretty much it shows in the blue bars the position now, 2024, and in orange the position as it was at the beginning of 2019. In the good old days, we would look at it as the broker, of the market where capacity supply is plentiful, the rates were low, it was a very sort of favourable position. So what we've seen in that time, I think, is about, on the right-hand side, 8 different underwriting companies exit the market. Some very notable names in there, like Hiscox, Allianz, Brit, and Canopius as well. So there's a lot of know-how, knowledge of space insurance exited the market. We have had, in this time, some new sort of companies come in, some with using experienced sort of underwriters, some sort of starting up for the first time on the left-hand side there, and in between a bunch of companies that have stayed the same or adjusted up or down. And then the other aspect to the chart we've got is the red trace there, which is really the change in capacity cumulatively over this time. So what we end up with is saying that from beginning of 2019 to now, we've lost just over $100 million of underwriting capacity out the market. But one thing that I think is the obvious thing to look at this and say, well, okay, but we still have now in 2024 just over $700 million of satellite capacity or underwriting capacity left in the market. That's plenty enough to insure even the most exotic satellite that anyone here could probably come up with. But that only tells half the story, really. The other issue is this is all based on theoretical capacity, the actual sort of dollars that the underwriters have available technically to underwrite. In reality, they have to manage their exposure, run a balanced book, not sort of where they don't feel completely comfortable with a risk. They will dial back the kind of amount of capacity they commit to it. So really it's a degree of the sort of the amount we get of that utilized is an illustration of the state of activity in the space industry and also the confidence of the insurers. And right now, Stefan sort of implied the confidence of the insurers is at the lowest it's been in 20 years or so in terms of their sort of whether or not they're going to incur further claims. It just seems that whatever they do in the past 2 years, the claims keep coming, and the claims are sort of more often and bigger than they've been in the past. So really, I think sort of the story here is one of sort of the challenge for the industry, and this the space industry and the space insurance industry is how to restore that confidence to insurers. I think that's probably a factor depending on obviously sort of more activity in terms of insurance buying to increase the premiums. I think the rates have already gone up by some kind of a considerable margin since the losses in 2023. I think as well there sort of can be sort of we can do better as an industry in terms of the transfer in the confidence, the technical confidence in the satellite and launch vehicle missions to the insurers, the quality of information delivered to sort of get to them, because they each have to make their own technical evaluation of the risk and try and sort of scale that as and that's what they base their underwriting decisions on. Okay?
So I think with that, I'd like to invite Sue to sort of talk through, from an operator's unique perspective, what this reduction in capacity in the market and the increase and the increased level of claims has been like, and how in her mind, what needs to be done in order to secure the long-term sustainability of the market. Go ahead, Sue.
Yes, thank you, Jacqueline. I'm Sue Yang from AsiaSat Satellite. It's a regional satellite operator who's based in Hong Kong. And we would like to thank APSCC and Marsh for inviting AsiaSat to join this interesting panel to discuss about the insurance market. And I was just jokingly, before we come up to this stage, we, the operator, actually foots the bill. So we actually pay for the variation of the insurance premium. as a result of what has happened in the past 2 years. And obviously it presents quite a bit of challenges to us. So how do we actually see the approach to secure long-term sustainability of the space market? I would like to talk about it into 2 segments. The first part is actually for the insurance community, and the second part is for the other stakeholders. For the first part, in terms of insurance communities, as you've heard from Stefan, who is the insurer, and Marsh, who is the broker, actually saying that we are the other side of the business, the client base footing the bill. We actually would like to see more differentiation in terms of specification standards for satellite systems, as well as the launch vehicles. At the same time, we obviously would like to understand the criteria for the risk assessment for each of the systems, as well as the launch vehicle, so that the insurance community can come up with some modular insurance packages with different pricing models to address different specific risks, so that when we, as a satellite operator, we have the options to choose how we would be the best fit for our financial capability as well as the risk tolerance level. That's the first part, which we would like to see the differentiation. And at the same time, because the geo system is very, very complex nowadays with all the improvements of the technologies, our satellite systems are having a longer lifespan. We would like to see more insurance pricing models to reflect those systems, i.e. some insurance packages may be extended beyond the design life of our systems, and based on the technologies of the systems that we've employed and used, as well as the historical record, to actually address those insurance rates. So for that part, if the insurance community can come up with more creative insurance packages, just like our health packages, we have different riders. So if we could have that, then we can actually choose from the riders as well as the packages to fit our own financial capabilities, as well as the tolerance level for the risk. And that's for the insurance community. As for the other stakeholders, we hope the satellite manufacturers and launchers should be actually accountable for the risk arising from the use of, sometimes we call it premature equipment and technologies. At the moment, we feel in this insurance community, they are not, quote unquote, liable in any type of challenges that we are currently facing. As for the satellite operators, we are responsible for our own choice in terms of systems. And that is very, very challenging for us, because we are actually trying to, how do we reach a balance, a right balance between innovation and reliability? And at the same time, we would like to be a responsible operator in terms of the space that we are operating in. That is challenging too. And with the recent, as Stefan and also Stephen mentioned, that in the past 2 years, there's all the major events happened. And as a result of that, there's the capacity in the marketplace has reduced. And guess what? Because the insurance premium has gone up, who suffered? The operator suffers. So we pay substantially more this year than previous years. So how do we actually hope and see and hope the industry evolve? We hope all the stakeholders collectively, including the manufacturer and launchers, could work together to be more transparent and corroborate, so that we could have a more fairer and balanced market for our long-term business in the space industry. Thank you, Jacqueline.
Thanks, Sue. I actually had prepared some questions to ask the panel, but I think there's some great questions which have come through on the Slido app, so we're going to ask the two most popular questions to the panel. So the first question is, I think, a very prescient one right now. It's how might the recent Intelsat incident where the satellite was not insured impact operator thinking? Should there be an introduction of regulatory requirements to insure? Sue, that's for you.
Thank you, Jacqueline. That's very interesting because I'm sure everyone knows that Intelsat 33 actually, after operating 8 years since 2016, sort of had an accident and suddenly have more debris than before. And now people are talking about 500 odd debris. First of all, nobody knows what those debris will happen or will impact the space as a whole and how would it hit or potentially hit other satellites. We don't know. But interestingly, because this satellite is self-insured, therefore, actually it's not impacting my insurer. It's not suffering. So it's not impacting the premium. That's the best part or good part of my insurance. But obviously, it will actually raise alarm to the whole space industry as to how we should govern and how we should move forward on those new systems in terms, because it's a HTS system and we need to actually find out or investigate to the raw cause or to the bottom of the real issues as to why the whole satellite blew up. So that, I understand, is still under investigation and it has not come through yet.
Stephen, Stefan, can I invite you to weigh in?
Yes.
I'll say, yeah, I mean, just from our point of view, Intelsat 33, I think it's public domain information, it was not insured. So it doesn't have any kind of financial impact on the insurers. Yet I think the obvious thing, obviously, as Sue said, the sort of we don't yet know about the cause of it, implications on other satellites. And I think the other factor is, the space environment issue, which again, I don't know, I haven't seen any data, but I believe it's probably too early to say, but it is a salutary reminder of one of the risks we all focus on and talk about, sort of losses arising out of satellites and launch vehicles failing of themselves, but there is the space environment risk as well, and it's a reminder of the
Stefan, do you want to answer?
Just one point to add. That's true that we are not directly impacted by this failure, but indirectly we are impacted because now it's too early to say exactly, but the environment has not improved, I would say, because of this event with lots of debris flying around. That's the first point. The first point, and the second point is that although it was not insured, we, the insurance community, absolutely need to understand what happened on this spacecraft and see if this failure, the anomaly, could apply to spacecraft that are in the insurance market.
So I'm going to ask the last question, and apologies for not getting through all the rest of the questions, but please feel free to accost the members of the panel during the networking section after this. So, Stefan, this is for you. With several companies pulling out of the space insurance market, total capacity falling and premium rates going up, how do each of you see the impact on new technologies and spacecraft placements over the next couple of years? That's the fourth question. Yeah, that's that one. Can I start with you, Stefan?
Okay. So it's true if we look at the claims that occurred in 2023, a significant proportion of them were, first of all, they were all based, almost all of them were based on satellite failures, not launcher failures, okay? And a significant proportion of them were due to satellite with a high level of innovation. So this innovation is really a problem to us if the innovation is not incremental. If it's a big step in the innovation, it can be a problem for us because historically, innovation, supporting innovation is endemic of the space insurance market. We are here for that. But the level of innovation has to be under control, and probably in the past years with an exacerbated pressure on further satellite operators that is translated onto the manufacturers. Maybe the innovation was too fast, and in addition, it was required to innovate at a cheaper price. So this conjunction of events might be a reason for the observed losses that we had in 2023. Looking ahead, what I can say is that, again, the insurance market is there to support innovation, but we are not a research and development agency, okay? So we have to find the right way, the right transfer of risk together with the other stakeholders. There must be a greater alignment of interest in the full value chain from the manufacturer, the operator, and eventually the insurer. And the coverage that will be provided must be adapted to these new upcoming risks with significant innovations.
Thanks. And Stephen, can I invite you to close it out?
Yes, I would agree to some extent. I'd say for that first question there, it's really a question of getting back to basics of what we've always done as a market, which is sort of encouraging anyone who's sort of looking at such a mission to sort of engage with the insurance market early, be kind of transparent and work through the process in terms of if you want anyone to support your project, be it an investor, sort of other partners, etc. We go through the process about building the kind of knowledge and the confidence of the insurers in the program, working through the issues and trying to be realistic in terms of the insurance coverage sought. But as Stefan said, the space insurance market, someone somewhere once upon a time insured a rocket for the very first time and probably were called out as being a little bit crazy. But that's kind of sort of still we're in that situation. We kind of have to kind of push on and try and keep these programs coming to the insurance market, because I think sort of the space insurance sort of market needs it, and I believe the space insurance industry has a need for it as well.
Great. So everyone, can you please join me in thanking the panel members? Thank you, everyone.